We have movement in the market already. Of course, the Dow futures fall 300 points as Amazon drops after earnings. The job reports are ahead, which we will get to in a second. Stocks making the biggest moves pre-market. So we got Dow futures falling 300 points as Amazon drops after earnings. We got the biggest market moves for pre-market is ExxonMobil, Intel, Apple, Snap, Amazon, and more. So yeah, it has begun. We have for pre-market, Dow futures is down 0.78%. S&P futures is down 1.08%. NAS futures down 1.68%. We also have the VIX, which is currently up. It is at 20.88, which represents an increase of 12.32%. So yeah, that's happening. We definitely want to watch the VIX. Of course, when the VIX is on an increase, traditionally, we may see as it goes up, we may see these indexes drop. So that is something to keep an eye on. Typically increased volatility. Intel shares plunged 22.6% in pre-market trading. NVIDIA down 4.4% as global chip stocks fall. We were talking about Intel last night on our weekly call. One of the things that I was saying is that Intel has been bearish for a while. It has a tendency to gap down anyway. It does do a lot of gapping, just generally speaking, it seems like. But definitely in the chip space, we were talking about ARM yesterday on yesterday's call around this time. ARM and a couple others were competitors with Intel, and so they're kind of in the same space. I shouldn't, maybe not competitors, but definitely in the same space. So Intel was on our list of stocks to watch. So we are not all necessarily surprised at the market movement this morning, but that's how it kind of has gone down so far. We got Japan Nikkei drops 5% to an 8-month low. We have Asia is mostly down, or shall I say all down. Nikkei is down the most, 5.81%. Kospi being down the second most at 3.65%, with 2.11% ASX 200, which is Australia. Europe all down as well. And the FTSE Milano MIB is down the most at 1.68%. So European markets lower amid global sell-off. Technology, financial stocks, they tumble. All right, let's take a look at our calendar for today. On today being Friday, August 2nd, we have at 8:30 3 red folders. The average hourly earnings month over month. We have the non-farm employment change, and we have the unemployment rate. Those are the 3 red folders for this morning, according to Forex Factory. Now, we all know that this is a good guideline to, keep our eyes peeled on what's going to happen for at least the morning push. At 10 o'clock, we got factory orders month over month, which is a yellow folder. Now, don't be fooled by the color of the folder. Just be aware that, something is still happening. We know sometimes it'll say a yellow folder, but then we might see something happening in the market, which may or may not be attributed directly to that particular event. But having it as a guideline, I think, is a smart move on our part. So we don't have anything listed on Forex Factory calendar after 10 o'clock. And we know that 10 o'clock turnaround is a real thing when we look at our charts. What we have for investing.com, I'm going to clear this up. We're going to filter it. Gonna pretend to be patriotic and just select out the United States and apply. See what we got. A whole bunch more stuff than on the other one, which is par for the course for investing.com. So there's a lot more happening right now. A lot actually has been reported right now. You got 1-star through 3-star events. We got all car sales for July, all truck sales for July, neutral in terms of its actual reporting. That's 1 stars, 2 stars for your average hourly earnings year over year for July, which was lower than forecast. That's 2 stars. The 3-star event was average hourly earnings month over month for July, which was slightly lower than forecast. You got your average, and that was again 3 stars. Your average weekly hours, 1 star, was slightly lower than forecast. That was a 1 star, as well as the government payrolls and the manufacturing payrolls for July, both 1 stars. The government payrolls was, this was the actual, there was no forecast for it, but the manufacturing payrolls apparently met their what was forecasted. Non-farm payrolls for July was 3 stars, was lower than forecast. Participation rate was 2 stars. That is reported 62.7%. No forecast there. The private non-farm payrolls, 97K, which is lower than what was forecast. That's 2 stars. The other 2 stars was the U6 unemployment rate for July, was reported 7.8%. No forecast there. And then the unemployment rate for July, which is 3 stars, was 4.3%, which is slightly lower than forecast. So take that with a grain of salt, if you will. 10 o'clock, the durables, excluding defense, month over month for June, 1 star. Also, the durables, excluding transport, month over month for June. And then the factory orders month over month for June is 2 stars. The factory orders, excluding transportation, month over month for June is 1 star, as well as the total vehicle sales for July. So that's at 10 o'clock. Those are the ones for 10 o'clock. And that's where that ends. 1 o'clock is where some of this should look familiar to us who are on this stream regularly. You have the U.S. Baker Hughes oil rig count. That's 2 stars as 1 o'clock. And the total rig count, also 2 stars. And I'm sorry, that's 1 o'clock. If I say 2 o'clock, I'm sorry. It's at 1 o'clock. Then at 3:30, you have the speculative net positions. The majority of a lot of these are 1 star, but you got aluminum, copper, and corn are all 1 stars. And then you have crude oil, gold, and NASDAQ 100, which is 2 stars. Again, this is all happening. This should be 3:30. 3:30. I might have said 2:30. It's 3:30. And then we have, what is this? Corn. Let's see. Natural gas, S&P 500. Natural gas is 1 star here. S&P 500 is 2 stars. Silver, soybean, and wheat are all 1 star. So this is at 2:30. This is something to be aware of, even though it wasn't reported on the other side. Again, this is investing.com. So, I would imagine, 2 stars should be something for us to at least pay attention to. Around 2:30, a lot of us are aware that that's right before what we call power hour. And so that's the second push of the day. Something may start happening after that point. So 2:30 is something to keep in mind in terms of your trading, depending on how it is you are trading. So let's be aware of that and that is happening, right? Let's take a look at what happened for the earnings last night after close. Of course, we had Amazon, Apple, Intel, Coinbase, DraftKings, Roku, Block, Marathon, Booking Holdings, and Mercado Libre. This morning at the open or before open was ExxonMobil, Chevron, Sundial, Frontier Communications, Magna, Advanced 6, Asbury Automotive Group, Enbridge, Fluor, and the Plains America Pipeline. So it's no surprise to see either one of these making moves this morning. People seem to be surprised that Apple is doing what it's doing, but I'm not surprised at all. When I was talking earlier about ARM, we were talking about Intel, and I was talking about ARM right here. This is who reported after close on Wednesday. They are in the same space. So ARM, Qualcomm, and Intel, those three are going to be in the same space in terms of semiconductor space. So that's what I was referring to, was ARM right here. All right. So we got that done and taken care of. We click off of here. Let's see what Mancini is saying. Strong follow through in SPX 54.24 to 27 was key support. I posted it was final support before breakdown at 53.91, and after testing 12 times last evening, it cracked, triggering the 53.91. Right to 53.91, tested 12 times, cracked, triggering 53.91. Plan today, same as yesterday, pop spot, but bears control until 54.25 through 27. They reclaim at 53.77, 53.55 below. So what I'm going to do, we can do 54.20. I would say we're going to do ES. We're going to look at, there's a couple different places we can put the Mancini line, but I would do I would do 54.27. Let's say we do 54.27. We're gonna, oops, that's the one I wanted right there. Let's go 54.27. Right. We'll put that one in. We'll put Mancini. I'm gonna show price on the right. And we're gonna add in show name. So about 54.27 is what I'm looking at as a good number to put in, since that is the higher number. But once we hit 53.77, or shall I say, if it reclaims this, it can continue below here. So that's the reason why I'm just putting that number on the chart. Good morning, everyone that I see on the call. Abra Janae, Saida the writer, Marsha Dawson, Karen C, and Lady T. Good morning to all of you. Thank you for joining us. Also, thank you for those who are catching us on our replay. We appreciate you. Don't forget, if you have any questions, you can always tag us in the question in the comments, and we will get to you as soon as possible. If you are so interested, we do have the charting webinar. Start with the chart.com. You can always take a look at that to either start and or add to your skill set for charting. There's something in there for everybody at various levels of charting. So that is something I would definitely recommend. This is the 15-minute chart for SPX that we are looking at right now. This is what happened on yesterday when it opened. For those of you who trade the breakout, when it opened right here, and it did what I refer to as a precipitous drop. That is what that is. So this is the 15-minute candle. Normally, if we trade in the breakout, we mark the top and the bottom of that candle and then wait to see what's going to happen. So in this particular case, it finally broke out around 10:15 and just continued down. Did not recover, did not come back our way. in terms of coming back up or retracing or anything like that. Me personally, I got in at I did the PDT hack on Russell, and that's another discussion that we had yesterday on our weekly coaching call. Thank you to everybody who joined us on there and brought great questions. Truly appreciate it. Hope you all got what you needed out of that session. The PDT hack was part of our discussion. I do the PDT hack, the 15-minute breakout, and then I use the PDT hack on Russell, but you can do it. We started doing it on SPX. So yesterday during this drop, I was actually able to get in and do a couple PDT hacks as it was dropping. So I was able to take advantage of the momentum of this fall right here, but I was doing it on Russell, which we'll take a look at that in a second. But obviously for today, we'll be looking to see which way this is going to go. Based on the volatility, the VIX is up. Wouldn't surprise me at all if this thing gaps in some direction. Who knows what direction it will be. But as you can see from the day, so this is 2 sessions ago. So after, let's see, right here, 54.36, so 54.36, gapped up to 54.94. Finally filled that gap on the last session. So if you look at the 15-minute chart, you'll see a lot of gaps in SPX. So it wouldn't surprise me if that happens again on today. All right. If you have any tickers you would like looked at, please do drop them in the box, in the chat box, and we will take a look at those. If you have any trades that you are currently in, we can look at those as well. This is Russell. This is Russell 2000. And this is what I was watching on yesterday. Again, same drop. So this is what I was looking at when it started dropping on yesterday. I would expect some type of gap up, of course, for this morning, and then we will be watching to see what happens immediately thereafter. Right? I see some requests for XSP. So we're gonna go ahead and take a look at XSP. XSP is also based on the SPX, which is the S&P 500. And so what we'll do is this right here. I'm going to clear this drawing set. This is the 15-minute, which is exactly what we just saw a second ago for SPX. Here's what I will say about. So this is the daily. This is the daily chart for XSP. So what I'm going to do for this is just show the actual say buyer zones, seller zones, or levels that I see in terms of formations. So what I'm looking at right here is that this is leg in, 2 in the base, leg out. This was a gap, and we discussed this gap in the morning recently, actually. And so this eventually filled the gap right here. I'm gonna put these as dotted lines because I guess technically we would be leaving that because current price is down here. Current price is 544, so it will be down here. Let's do it this way. So I'm seeing this as potentially being in a buyer zone right here. I would say leg in, base, leg out. But to be honest with you, what really was happening is This back here looks like a cheer formation. This gapped up and based right here. And so when it did that, to me, that's what's causing this up in here, because this is a buyer's gap. Let me open this up. So this is a buyer's gap. It gapped up. Buyers pushed the price up. This is $5.40, about $3-ish, somewhere in there. So since this is a buyer's gap, I would expect buyers to be in here. So I kind of looked at this as kind of leg in, 3 in the base, leg out, because of this gap up. And so this is trying to work its way through that gap. As a matter of fact, to show it to you visually, let's do it this way. So this is how much of this gap would be left. All right, so it's already pushed into here, still trying to fill it. So yeah, I would say the current, most recent buyer zone would probably be right here. It's not the greatest leg out or what have you, but obviously there's something going on in this area, even up here, because sellers keep turning it around. But you have this seller zone up here, and then you have another one right here. So there's two seller zones right on top of each other. And I'm even going to change this color, right? So you got leg in, base, leg out. This is a very strong leg out. When it dropped pretty much right into this buyer zone. The buyers pushed this back up at the end of the day. And if you look at the 15-minute chart, this is the buyers pushing this back up. This is 245. So around that 245 mark, they start pushing it back up. Still a little bit of indecision right here at 230, but that's what happened at the end of the day. Right about there. So we have a seller zone here. In my opinion, leg in, 1, 2, 3, 4 in the base. And we will put a buyer zone right here. So leg in, 4 in the base, and then this will be the gap up for the leg out. That's how I would look at that. So we have a gap right here, right up under current price. And then we have a buyer zone sitting right up under that. That's how I would view that. I'm open to any and all objections on that, but that's how I see it. Right? Leg in, base, leg out, seller zone, leg in, 1, 2, 3, 4 in the base, leg out. This is not that great of a buyer zone, but if we just charting what we're seeing, that's what I'm seeing. Right? So buyer zone number 1 would be right here, and that's the one that is in. Buyer zone number 2 would be the one that I would expect it to be heading down next. And quite frankly, this formation, this chart pattern seems to resemble, and I think we covered this yesterday, this seems to resemble a head and shoulders chart pattern, which is a reversal. And I think I even said on the air yesterday that it wouldn't surprise me if this started going down and reversing this way. Head and shoulders. And where did I get head and shoulders? So if we looked at this as one shoulder, matter of fact, you could probably do it this way. Just kind of look at the peak of it. And it's never going to be as perfect as the picture that we look at, but this is what it reminded me of. So if we said somewhere in here was, let's say we consider this the shoulder, this the shoulder, this the head. Head and shoulder is a reversal. So south to north is the pole. It bounces around. It goes above in terms of the peak. It does not come back and go higher, and it reverses. The neckline would be the entry. So if that is even close to being accurate, it would not surprise me if this looks like a weak buyer zone right here. So I don't see why it wouldn't come back down and continue down a little bit. Anything is possible. But that's what it reminds me of in terms of XSP. Someone was asking earlier, we're gonna have to for the XSP numbers, Saida, that might be something I need Saida for. To look at the Mancini numbers and get us the XSP numbers, because I don't trade SPX, so the XSP numbers is completely out of my jurisdiction. But what I will do though is make sure I put the Mancini information in our Telegram group so that we will have it. So I'm going to do that right now. And this is in our tier 3 group and our tier 1. So I am posting those in our main groups right now. The Mancini numbers. I believe I'm trying to remember what the I think it's 10%. So I want to say, yeah, no, I don't want to get y'all the wrong numbers for that XSP. So I don't even I thought it was Saeed is saying remove the last digit, and I thought it was 10% or something like that. So that sounds right. But I think Saeed they were asking for the I guess you could say call credit spread and put credit spread number. What would be the range for that? So to answer the question for Abra, we were talking about the leg in and leg out. When we're looking at our candle formations, generally speaking, we look at 3 to form a candle formation. And this might be getting into the weeds a little bit, but I'm answering the question. To form a candle formation, there's usually 3 parts. There's a leg in, there's what's called the base, and the base is usually where there's a tug of war between the buyers and the sellers. And so that base candle is usually what we look for something to happen differently or something like that. And then you have the leg out, which is the third leg. In this case, it's the sellers, but leg in, base, leg out. Sometimes there's like this would be leg in, 2 in the base, leg out in that case. But usually there's a leg in, base, leg out. Those are the 3 parts. The base is the only one that may have a couple candles, but a leg in, base, leg out. And all of this is telling us is, helping us mark where the zones might be. So we know where to get in. Everything is based around giving us idea of where to get into the trade and where the buyers and the sellers are. In this case, it was leg in, 1, 2, 3, 4 in the base, depending on how this is charted. But since it gapped up right here, I just considered that a leg out. And so that's what the leg in and the leg out is. Leg in, base is where it goes sideways. Again, middle candle, indecision, things of that nature. And then there's usually a decision on that leg out, whether it's going up or going down, depending on what you're looking at. But that's what that phrasing is. In this case, leg in, 2 in the base. The leg out here was a gap down. So there was a drop right there. So, a rush of orders came in for sellers. right there. So that will be a strong leg out because of that rush. But that's what those three components are: leg in, base, leg out. Right? So Apple says okay, so we're good. As of right now, we're looking at 54. So we're looking at 544. Now I know, see, some people are in trades right now. Today, if you were trying to get in for 0 DTE, I don't know if I would do it, but if you were doing 0 DTE right now, probably would be somewhere. I'm usually going for probability out the money of about 80. So I'll be down here where the chickens dwell. But I usually do a one spread. It's 9 o'clock. So the market ain't even got to moving. But so for one spread, this is actually kind of high for one spread. So I will be waiting until the market actually open, but just to do some checking. This is one spread, which will be $100 collateral. And this is saying 29.30 on that. I'm only going there because I was looking at where this is at. So if we were trying to go underneath or something like that, you want to be below this. Since this is in the seller zone, I'm looking at both sides. So if we were going above, not as many. Well, if you did 77% out the money right here, and then you did a one spread, you got no coin quite yet. So you really would have to wait until market opens in order to do this. Now that's if you wanted to do expiration for today. If you wanted to go expiration for, let's say, Monday, totally different thing. I will still say, aim at least 75. So you can do 544 plus 8.7, 544 minus 8 plus 7. That would give you a approximate range on where you can get in. Not investment advice, but that is part of the strategy and how we go about doing it. I will be somewhere in here. Say, I'll be somewhere in here. 77%. So we're still looking at about 30 cents for one spread for next week. And we're going above it. Again, I'm literally just looking at out the money percentages. And the premiums are still not as high over here as it is at the bottom. But again, pre-market. So that's happening. But if I'm looking at it as if it was an iron condor, which is a credit spread on both sides. So that's why I was looking at both. But obviously the better numbers, better premiums are going to be under current price because this is headed in that direction overall. All right. So that's what we'll be looking at, about 30%. 30% of our collateral for right now. So I'm reading. I'm in the put. Saidi, do you mind sharing what your put is and when the expiration is? If you don't mind. We're gonna look at Apple real quick because it's one of the market movers. If you notice, Apple looks just like the XSP that we just looked at. Head and shoulders, right? Shoulder, head, shoulder. This is the daily chart. And I'm charting Apple right now. I will be looking right here. I'll be looking at the seller zone. Whoops. Let's do this. Duplicate this line. I'll be leg in, base, leg out right there. And I'll be looking down here. There's a couple ways you can do this. This would be a small leg in, base, and this would be the leg out. Or, well, that's the main way to do it. Based just on what's sitting there right now. You could include all three of these in the base and do a longer leg in, three in the base, leg out. Either way, it's not a perfect formation, but just based exclusively on what we're looking at or what I'm looking at, that's how I would see that. Buyer zone, seller zone, they are close to each other. Let's put price on the right. Price on the right. 209, 221. Yeah. Again, this is coming out of a seller zone. This is pushing out. Matter of fact, this right here is a cheer formation. Leg in, three in the base, leg out is how I see that. So this really came into a cheer formation. Let me put a visual on there and do it this way. So at some point, I'll imagine. So leg in, three in the base, leg out. So this at some point was charted, I'm sure. And so this came back around and retested it. And that's where it's sitting right now. Right. But it still looks just, to me, it's first thing I noticed was that it looks just like the head and shoulders formation. So this could very well continue down if that's what it is. I'll be waiting to see if it breaks past this 214, 215 area, especially. So that's what I'll be looking at. The question is, what are the other market movers besides Apple? If you go to CNBC.com and you scroll down on the right side, it'll show you this list right here. And some of these I'm not familiar with. I won't lie about that, but you can click on market movers and then it'll give you the list. So you got top gainers. These I have not heard. I've only heard of Southern Company here, and C.H. Robinson I have heard of. I feel like there might be shipping. I think I've heard of Cummins. And this is Aflac. Of course, we probably have heard those commercials. And then, so that's S&P. For the NASDAQ market movers, we got Meta. I've heard of Dexcom. There's T-Mobile in there. Vertex Pharmaceuticals I have heard of. Intuitive Surgical I have heard of. Pepsi and Regeneron are under the NASDAQ groups for the market movers. And then the market movers for the Dow is Procter & Gamble, Johnson & Johnson, Coca-Cola, Walmart, McDonald's, Amgen, Verizon, Merck, Visa, Honeywell, Microsoft, and United Health Group. I'm pretty sure most of us have heard of the majority of these. I would imagine, right? So those are the market movers, and that's updated, if I'm not mistaken, in real time. Put that in quotations, real time. But when you want to go there and check, I just clicked on market movers and chose which one of the indexes that I wanted. and went from there. Top decliners, of course, there's Intel. No surprise that Boeing is in that list as well. So on yesterday's call, we were actually talking about some of these. We were talking about ATR, the average true range, what that is, and how that's used in relation to the volatility amount in our options chain. And we were just discussing, the differences and how we can use those to our advantage. So the ATR, at least on Thinkorswim, I have an ATR column right here. So that lets me know the average true range. Then triple Q, we'll use triple Q as an example. The ATR is 9.38, but depending on what we're trying to do, the implied volatility is 5.8. And this number is talking about the range that this may travel, by the time this expires, basically. So that's really the main difference. This number is based on the expiration, and then this number is based on whatever number of candles you have. Let's say if it's 14 candles, it's going to average out the price range over those 14 candles. For some people, they might change that number to be higher or lower, but on the day chart, it would be 14 days. On the 4-hour chart, et cetera, et cetera. Whatever each candle is, they'll change that number, but it'll average that amount. So both of those numbers can be used to our advantage. But what we were noticing on yesterday is that some of the stocks are just not really good for using for options. And some of them just didn't have a good average true range. So they couldn't really be used. So we were looking at Russell 3000, Russell 2000, things like that. Just, just to check and see and show that, sometimes the tech sector seems to be the ones that have the higher ATRs and the higher implied volatility, which puts us closer to higher premiums. So Walmart was in that list. It was some in that list where we may not see any type of movement because the ATR was so low. But so we got XSP. I'm paying attention to Russell 2000, 15-minute. I'll be doing the breakout for Russell 2000. And we were also discussing the PDT hack and how it can be used for not just zero DTE, but like pretty much everything else that we trade can be used for expirations that are further out as well. So I was walking through that process. So hopefully everybody enjoyed themselves on that call and got their questions answered. This is going to be a different color. And then we're going to get you guys out of here. So let's switch this up. I just start putting some levels in right before market opens. So when it starts gapping, I am aware of where the levels are automatically once the morning gets started. Yeah, so we'll come back to that. So I don't see any other tickers. All right. I want to put in, make sure we share this. This is the link to Axe Options for the PDT hack. Her name is Ariana. Axe Options. Axe Options. I'm putting this in our. This is where I learned the PDT hack. My understanding is a lot of us have watched the videos and seen it. So you should be able to see that link. Other thing before we get moving, I want to make sure we got the E2T freebies. Just want to walk you through that real quick so you can see what is available in case you want to download something. There you go. Let's take a look. See, you got your chart your way to 100K. The cheat sheet for that. We actually had a challenge, 100K challenge. Seemed like as soon as we got started with that thing, the volatility started going crazy. But a cheat sheet was created for that. So you can go ahead and get that as a download. There's a webinar to how to read stock charts is on here. And that's pretty good. You got the 0DTE strategy cheat code that's on here as well. If you know somebody who is beginning with the options, this is a good one right here to download. You also have your trading strategy. What's the strategy that best fits your personality? And I would even go as far as to say lifestyle, your trading lifestyle. We got hacks for the SPX. And then you can, of course, join the membership there as well and join here. So definitely some good freebies to get you started. Everything is all about what you can put in your toolbox to get sharper. So just because it's free does not mean that it is not of value. That is something to always remember when it comes to trading and information. So let's swing back around. Dow futures is down 1.08%. S&P futures down 1.46%. NAS futures down 2.17%. And the VIX is up 12.96%. I just saw a inbox regarding Amazon, so let's check them out. See what Amazon is saying. Open this up. Yeah, something's getting ready to happen pretty soon with Amazon, meaning in terms of direction, because these zones are directly on top of each other. Here's a buyer zone that I see. And so it's in this buyer zone right now. And I'll put it like this. Duplicate. So that's leg in, base, leg out. And then right here, you have a seller zone. And when you have these zones closer together, some it's got to move in some direction, right? So to me, it looks like they're what I would call squeezing together. You got buyers sitting in here. This right here is a strong. I'll be putting something right there because that is a strong buyer reaction right there. Something's going on at 166. Definitely. Keeps coming down here, and last time it came down here was a very strong rejection. So the buyers pushed this up big time. So if I was looking at this, Again, you got it's dipping into this buyer zone. Yeah, you're doing the same thing. What is that? 175. So if you're going, I'll be looking at probably 162, something like that. Now again, this is if you're trying to get it. This is 0 DTE. So honestly, I probably would be looking at next week and then looking to close early. Is what I would do. So if I was over here on the 160-ish show for 80% out the money, something like that. And of course, I'm looking at this. The market isn't open, but just keep in mind that these numbers will change. But if I was doing the put credit spread, I'll be looking somewhere in here, 160, 157. That's almost 10%. You can always increase that to make that 0.25. This is a 2.5 spread, so that collateral is $250. On the other side, and the market is not open right now, of course. Definitely higher premiums on this side for a 2.5 spread. But again, market is not quite open yet. Things are starting to fire up. But I'll be looking at I'll be looking to see, what's going on with Amazon. The question was asked, are your zones on the 15-minute? So on the majority of the time, depending on really depends on what I'm looking at. This one was on the weekly. I thought it was on the daily. Normally I try to chart everything on the daily. This was a coincidence. I didn't notice that this was on the weekly. Normally I would put that on the daily. So obviously that changes. You can always use those weekly numbers if it has a strong enough formation. So that's a nice catch. So this will be leg in, base, leg out. This is a cheer formation right here. And then I don't even know what you would do for a buyer zone down here. Oh, here you go. Right here. So you got a couple things you could do right here. Leg in. Let's say you can do 2 in the base with the smaller leg out right here. Would be okay. Leg in, 2 in the base, leg out. You can do 3 in the base if you wanted to, and a leg out. But either way, it's not that strong of a leg out over here. But I like this as the strongest in this area. This one right here. It's nice, strong. So leg in, base, leg out with the gap up. I like that one. So that would just mean I might have to wait for price to come down there, which wouldn't be a problem. Amazon is obviously it was a bigger mover when it was before the split, but yeah, I'll be looking at something like that. If we consider this to be the buyer zone that it's in currently, then this would be buyer zone number 2. So that's how I will be looking at that. So that's on the daily. Usually, so I chart on the daily. I usually do top-down analysis anyway, where I start off marking these swing points. wherever there's swing points, wherever price turned around, monthly, weekly. I don't do, I just do the ones that I see clearly for that particular time frame. Then once I get to the daily, if I'm charting it just to look and see what it might do, then I might stop at daily. If I'm trying to trade it, then that's when I look at the 15-minute version, the 4-hour and the 15-minute version. Because if I'm looking to trade it, I'm looking to be in. I'm probably not going to be in very long. So like my Russell 2000, so Amazon, I'm usually going to be right here, probably maybe even 4-hour, just to check and see what it's doing. But if I'm not trying to do anything with it, I'm cool with just charting it right here. I'll come back and take a look at it, see where it changed. But once it's time for me to do something like Russell 2000, then that's when I'm switching to the 15. I'll do all the same, all the same markings and everything I normally do, but I'll be on the 15-minute one because that's the one that I'm trading, and I need that 15-minute breakout information. So roundabout way to answer the question, but yeah, it just depends on what I'm trading. That'll determine whether my zones are 15-minute on the 15-minute chart or not. Depending on if I'm trading it or if I'm just watching it. So that's how I kind of separate those out. All right. The bell is about to ring, so I want to make sure if you have any last minute stuff you want to take care of. I want to make sure that you are free to do that. Thank you all so much for swinging by, hanging out with us. Abracadab, thank you. Janae Saida, the writer. Marsha Karen C, Lady T. Thank you all for swinging by. Truly appreciate it. Thank you all for your questions as well. Lady T, you're awesome. Appreciate your participation. I will be on again on Monday, filling in for Alyssa. That will be my last day of the run. As of right now, we're going to swing on over, do our declaration, E2T daily declaration by faith. I am a successful trader. I'm a wise and knowledgeable trader. I make smart and lucrative decisions for my portfolios. Money likes me because money is comfortable around me. It is drawn to me. LL, thank you for hanging out with us as well. E2T daily prayer. Lord, give us wisdom and knowledge for our trades today. Help us to make smart and lucrative decisions for our portfolios. Also, big shout out to our all of our people that are on our replays, that are watching the replays. We appreciate you. Thank you so much. Once again, if you have questions, please go ahead and put the questions in the comments section and let us know if you need something. We are here to be able to help from the seller standpoint. That is our priority. I will let you all go. You all have a great trading day. Stay green, get this money, and let us know how your trades went on today. Trade with your head on the swivel. All right. You all have a good one.